and I am back to give some more knowledge and share some more of my information to you all. I do hope everyone's having a great day so far. I started off my day great because I drove to the farmer's market, the Tustin one, and I got some coconut keto coffee, and it's so good. I highly recommend it. The company's called Coco Moo. So it's Kokomoo, Coco Moo. And they're only at the farmer's markets over here in Orange County. But it is so good, and it's refreshing, and it's tasty, and it's dairy-free, and there's no sugar. It's like sweetened with monk fruit. So it's delicious. I recommend it. Anyways, speaking about driving, I had an old tax client of mine reach out because Jeremy, he had a question about auto deductions and also about a template that I used to create that I had. And so what I thought was today I would combine the tax topic and the question and do something a little different, share my screen, and also him reaching out reminded me about this template that I have. So I want to offer you a special gift at the end. So stay tuned to the end. But first, I do want to do this teaching and training on the auto deduction and how it works. And I figured the best way to do it is to visually show you. So what I'm going to do right now is share my screen and talk about this auto deduction and walk you through it, tell you how it works. So let's get into it. So as you can see, the auto deduction, there's some people that picked up little side gigs last year. Maybe they picked up an Uber job or a Lyft job, or they're driving for Uber Eats or Postmates or Grubhub, any of those rideshare systems. Well, what do you do when it comes to tax time? You know, you're going to get 1099 from them. Like, what do you do? So first is you have to keep track of your mileage. You have to know how many miles you drove the entire year. So you can't really go backwards, but it's good to know what the beginning odometer was at 1/1/2020 and what the end was at 12/31/2020. You take the difference, then you know how many miles you drove. So for this year, look at your odometer reader now and just keep track of it. Go back to your oil change reports because it lists your odometer at the time that you got an oil change, and you can kind of estimate and work backwards and just estimate your best estimate based on your oil changes and the receipts that you have from that or the documents, and just estimate the best guess of how many miles you drove the entire year. So that's the first step. Let's say it was 5,000. I think a lot of people drove a lot less last year. Everyone working from home. So usually the average is 12,000, but it's going to be a lot less for 2020. So let's say it was 5,000. Now, you're supposed to keep track of the miles that you drove for business. Usually, if you drive for these companies, they'll give you a report and show you how many miles you drove. If they don't, you're supposed to keep track of it yourself. So, people have apps that do that. They track the miles through an app, or you can do it manually, just in your car every time you start driving, just do the little trip thing and your odometer thing and keep track of it that way. Another way people do it is just estimate. They guess, out of 5,000 miles, I might have driven 20% for the business. So that's another way to do it. Just estimate. Obviously, the best thing to do is to know exactly how many miles, but that's a little hard to do sometimes. But sometimes these companies will give you a report and they'll say how many miles you drove. So that's the second step. Number one, how many miles did you drive the whole year? Number two, how many miles did you drive for business purposes? Now you take how many miles you drove for business, you divide it into how many miles you drove in total. That gives you your breakdown of your percentages. So that gives you, okay, I drove 80% for business and 20% of it, 80% for personal and 20% of it was for business. So that gives you your percentage. Then you've got two methods you can use. There's the business mileage method or the actual expenses method. You use whichever one gives you the biggest deduction. And once you select that method, you have to use it until you change cars. So here's an example. So let's say it was 1,000 miles. This is the mileage rate for 2020. The business mileage rate for 2020. You get 57.5 cents per each mile that you drive for business. So 0.575 times your business mileage gives you a deduction of $575. That's cool. Do you know that that's how much this method would give you? But let's just say you want to see how much your actual gas was and your insurance and your DMV and your repairs. And if you own a car and you're financing it, you put your interest that you paid on the loan. Or if you lease a car, you put your lease payments here. And you total that up and you multiply it by the actual business percentage that you got from the first step of the first two steps, So that's how you got your percentage. You multiply your actual expenses by your business percentage. That gives you your deduction. But look, it's lower than the mileage method. So you don't want to do that. You want to do the mileage method. So you don't even have to worry about keeping track of all of that unless you want to compare. But, let's say you lease a car and let's say your lease payments are like $250 a month. Well, guess what? You're going to get a way bigger deduction if you use your actual expenses. So use this one instead, Sometimes when you lease a car, that helps. Let's say this was 5,000 miles. Okay, that changes it. So look at that. Even if you lease a car and you have that expense for leasing a car and you're thinking, oh my God, I have all these car expenses, like I'm going to get a big deduction. It just depends. It depends what your business percentage is. But if you drove a lot and you had a lot of miles, look, let's say you had 5,000 business miles. That's going to be the bigger deduction. Even if you have a lease payments, even if let's say you had a lot of repairs, let's say you spend a lot on gas. You spend like $8,000 on your auto and, it's the mileage is getting the better deduction. That's only if you drive a lot of miles. If you don't, and this is like really low, then obviously your actual expenses are going to be bigger. So that's how it works. You have two methods, the mileage method, the actual expenses method. You choose which one gives you the biggest deduction and you go with that one. Also, you can write off a portion of your telephone. The business portion, if you spend $960 on your phone, then you can write off the business portion of it. Maybe for the Uber drivers and the Lyfts and the rideshare, maybe you bought tissues. Maybe you bought PPE, personal protective equipment, like masks and plastic screen dividers, or candy or water to put in your car for your customers. That's all tax deductible. So this is a little snapshot of what you could do if you were a Lyft, Uber driver, Postmates, all of that. The auto deduction will be your main thing. And then there's all these other deductions also. So this is just a little snippet of it. I actually have, I'm going to stop sharing my screen now. That's the auto deduction. I actually have a template that goes way more in depth. It has your auto deduction calculation in there, so you could use it and just plug in the numbers and it'll calculate for you. And it has way more other types of business expenses that you can take advantage of. And it could be used for any type of business. So it's a template. I'm going to put the link in the chat and give it to you. So it's there. Hopefully that shows up. If not, I'll put it in the description. But go there, get the template. It'll give you a list of all the various general business deductions that you can take advantage of for your sole proprietor business, if you're self-employed, if you're an independent contractor, if you're just starting out and you know, you're thinking about doing something, so you spend some money and, you know, maybe you didn't make any money. That's okay. You can write this stuff off. The IRS allows you 3 out of 5 years to show losses in your business because they expect you to like have losses in the beginning and then eventually make a profit. So you have, you know, you can show a loss. You don't have to be making money to be able to write these things off, as long as you have, you know, a legitimate business idea that you're going after. So I'll share that template with you. It's free for you guys, and that's what I've got. Hope this was helpful. Let me know if you have any questions. Put them in the comments below. And until next time, bye.